Hello, everybody. Welcome to Thursday. The S&P 500 was up just a little bit more than a half a percent today. Closed at an all-time high, which is pretty awesome. Almost closed above 6,300. It tried really hard right there at the end. Ended up at 6,297. Today we had good news on the unemployment front. First-time unemployment claims were down again, really for the fifth, I think, week in a row. So that's a good thing. And then retail sales were up when it came out. Part of retail sales being up is because inflation is up a bit on some of those goods that they're buying, so it costs more. So it looks like a little bit higher retail sales than it might be, but still not a bad thing. And this is kind of what's going on. You've got this scenario where the market has come back. People are still buying stuff, trying to get ahead of these tariffs, that might kick in here, at the end of the summer, early fall, and such too. So makes things look pretty good. Actually, unemployment's decent. You've got, a pretty good market altogether. If you look behind the scenes a little bit, the stock market has got a bit more of the, what they call the advanced decline line. So when you're looking at, how many stocks are advancing versus how many stocks are declining, it's been a little bit weak so far this week. It's showing a little bit of a topping motion. And of course, today is the 17th of July. We've been talking about, this data set since 1928, looking at half months. And, the best half month is the first half of July, which we just accomplished. And in that data set, the average peak in July was on the 17th. And again, it's because the half year ends and this big wall of money comes in, probably is done by the 17th on average. I know last year it peaked on the 16th for example, and then we head into kind of a softer season as far as that goes. So, especially September, and we'll see what happens there. Now, September could be offset somewhat so by, a rate cut that they might do at that meeting. The Fed meets July 30th, so the end of this month. No expectation for rate cut there unless they end up firing Chairman Powell and putting somebody else in, which has been talked about, but seems to be, off the table at the moment. But the next meeting is the 17th of September. They don't have an August meeting. They would be able to then maybe lower rates. But what we've seen in the last week, for example, because these numbers that are coming through are pretty decent, we're seeing less and less bet on the cut in September. A week ago, it was at 70% chance that we'd have a cut. And right now we're at a 54% chance that we would have a cut. So still slight majority. But, again, as these numbers have been coming in, both from the CPI, where it was a little bit higher in terms of the inflation, and the unemployment is looking good. Retail sales are good. I mean, why would you be cutting rates here other than the fact that, there's some political pressure to do so? So I wouldn't be surprised to see if they don't hold them. I also wouldn't be surprised to see the chairman of the Fed replaced here at some point too. So, we'll have to see how that plays out. But look forward to, being able to see what's going to happen tomorrow. Today was a good day. We have our show tomorrow. I'll do a summary for what I saw happening for the week. We'll talk about all the big kind of macro, pressures that are being placed on the stock market right now. And then you can ask any questions you want live. And again, that's Talk Money with Tom on YouTube at noon on 12:15 on tomorrow. Anytime you want to join us and sign in and ask questions, we'd be great. So anyway, look forward to being able to see you then. Thank you.